Hey everybody, Economic Ninja here. I hope you're doing great. Just gonna do a little sound check. Let me know if the background check sound is too much, but I thought this is a better view for you guys. We're gonna talk about JP Morgan. We're gonna talk about Chase Bank. We're gonna talk about First Republic. Then we're gonna talk about something called DSCR loans. Now I'm coming to you live from Seattle because we are up here filming more content for the real estate crash course. By the way, I'm gonna throw some links down there. $250, it's 75% off. And next week, you will be signing up for, or you will be given a new course for free, and that is Home Seller Pro, because there are a lot of people having a hard time selling homes right now. I know it sounds crazy because people are like, oh, your house is worth so much. It's only worth what someone's willing to buy. And I don't know if you know this, but last time I checked, everyone I know listing a home for sale, they don't have anyone coming in. All right, so here we go. This story is out of American Banker, and it's entitled JP Morgan shutters 14 First Republic branches, more closures are expected. Now, we already knew this was gonna happen. JP Morgan was the recipient for pennies on the dollar, most of First Republic's assets. Now, that was one of the banks that shuttered and closed their doors back in the spring. The first wave of banking closures has been finished and done, and we are about to expect a whole new wave of banking closures here in the next, let's see, about 3 weeks. And the reason why I say that is because the banks are having more and more pressure put on them. Now, at the end of this video, I'm going to talk about something called DSCR loans. They are the new style of ninja loans. I know it sounds crazy because people are like, nope, this time is different. The great financial crisis got on top of the banks. Nope, they figured out a way of doing a lot more. And I actually covered DSCR loans in the real estate crash course. And the reason why I did is because they are very important and a great way for investors to use them as a tool to get money and then actually have those assets that you're buying with that money, the real estate, held in an LLC, where the LLC actually takes on the little kid sitting right there. I'm seeing her in my camera. See, I love that. Love little kids, you know, playing. They're just like at the end of the, anyway, sorry, I'll get back on topic. DSCR loans is a great tool to use, but if mismanaged, and a lot of them were, especially the ones that are adjustable rate mortgages, they're gonna cause this next catastrophe. Okay, JP Morgan shuttering these first 14 Republic branches. There are more coming. It says right here, JP Morgan Chase has closed 14 former First Republic branches in California, completing its initial plans to trim the failed bank's branch network after taking over in May. The offices were closed last week, according to the Office of the Comptroller of the Currency's weekly bulletin of bank branch closings and openings. Half of the locations were in San Francisco County. The remaining ones were spread across 6 other counties in California. Earlier this year, JP Morgan said that it planned to close 21 First Republic branches by the end of the year. All of those closures have now been completed, according to a source familiar with the matter. Let me just say this, that is not the final number. There will be more. The shutdowns represent 1/4 of the 84 branches that First Republic operated on April 30th, when it was closed by the California Department of Financial Protection and Innovation and placed into receivership with the Federal Deposit Insurance Corporation. The next day, JP Morgan, which is the largest U.S. bank by asset size, acquired all of First Republic's deposits and virtually all of its $229 billion in assets. Now, let me stop there and say, when it says virtually all, it did not want commercial mortgage-backed securities. These are the tainted assets that are going to cause all of the country's real estate to implode. It is the derivatives on these commercial mortgage-backed securities are so massive, so they're so deeply entrenched, it's going to ripple through both commercial and our regular mortgage-backed securities. I know it sounds crazy. It's going to cause a tightening, if you will, of the financial system, and you are going to see a shuttering of real estate. It will blow your mind. Now, it says right here, JP Morgan said that folding in the First Republic gives it access to a mostly affluent client base and allows it to expand its wealth management business. The deal is expected to add about $500 million in earnings every year, according to JP Morgan. And that is true. First Republic had a completely different base of clientele. And remember this, check this out. That deal was struck 1 week after First Republic, the one where they took on those $229 billion in assets. It was struck 1 week after First Republic disclosed that it had lost $100 billion in deposits. Now, those deposits are very, very important. Why? Because as Jamie Dimon knows, and JP Morgan Chase knows that as they get more deposits and they put them under their covering, their umbrella, their bank, institution's name, they get to loan out more loans. Now, that's a problem right now because so many banks don't want to make a ton of loans. Why? Because the consumer is done. They're tapped, and they know that. And they know that as Biden is scurrying to find voters, he's doing crazy things like, oh no, if you don't pay on your mortgage or your medical debt, it's not going to hit your credit score. There's going to be more and more situations like that where customers just go, I'm just going to pick which loan I'm not going to pay on. And that is going to be the death nail, I don't even got a good term. I mean, it's just not good. No bueno. That's probably the best one. Put down what if you got a better term for it here. Now it says 21 branches were selected for closure, had relatively low transaction volumes, and are generally within a short drive from another First Republic office. JP Morgan said in a statement. Earlier this year, the 63 remaining First Republic offices will be rebranded as Chase Bank branches. Over time, the remaining First Republic branches will either stay open because they're in better locations than nearby Chase branches, or they'll be closed due to their proximity to an existing Chase office. Now, take all of that information and put it into any other bank that's taking over another failing bank situation. And what you're going to do is as they take over other banks and their branches, they're going to close either theirs or the company they bought. Just makes sense, right? You've only got so many branches that you can run at one time successfully in proximity to the other branches, all right? Guess what this means? Really, when it comes down to it, this massive transformation in the banking system that you're going to witness in 2024 is going to just mean less branches, period. Okay? More online. That's where they all want you to go. They want total control over your finances being digital so they can do micro-taxation through all of your transactions all the time. All right? Now, let's dive over to this DSCR story. And this is very, very important. So, I just look at this, a sponsored ad from on Google right here, right? It's from Trust Financial Group. No reserves needed, DSCR. Now, let me give you just a quick synopsis or just really quick 50,000 foot view of what a DSCR loan is. It's a financial instrument, a loan, a mortgage, that a person or an entity like an LLC or a C Corp, or either of those with an S Corp filing, could take out in the entity's name. And it is based not on the past metrics of what a lot of mortgages are made, like the borrower's credit history, the borrower's social security number, things like that. It's actually just off of rents. And the rents are a little skewed right now. And that is leading to a massive problem you're going to see in this market. It says right here, just their advertisement, qualify only using rental income. Never show a 1040 or sign a 4506 again. The largest stated income. Are you hearing what I'm saying right now? Remember the ninja loans, they're never coming back. And I go, oh yeah, they're coming back. Well, DSCRs have been around for a while, but they've really made a resurgence or really a move in the past 3 years, especially with this whole idea that you can borrow money from a bank, not in your name, but in your entity's name. And that's a really neat thing. I do a specific video in that course because why you'd want to use it. But you have to use it under certain parameters, one being a fixed rate. And even though the bank's only looking at the rents, I need you looking at other metrics so that you don't lose your butt, right? But a lot of people just don't care about that. So check this out. This goes into that advertisement right now for Trust, right? Financial Group. DSCR loan. Qualify today for your DSCR loan. It says just use rental income to qualify. Never show tax returns. Purchase or cash out. Unlimited properties are okay. No personal income. Type 1 if you think that this spells disaster. Type 2 if you not only think it spells disaster, but this is almost identical to the ninja loans we saw, the negative amortization loans. But don't worry, I'm not done yet. Check this out. It says purchase or cash out, unlimited properties, no personal income needed for verification. No ratio option with 25% plus in equity. This is insane. Irrevocable trusts are okay. Why not? Fund into a corporation or LLC. Now, I want you to think about how damaging this is going to be for the banks that are backing these, supplying the money for these loans. Think about this. If you do it right, and this is how I want everyone to set up their entities, you make a loan, if everything goes to crap and you walk away, you don't have any liability. Think about that. Think about this. A lot of people use these DSCR loans to buy 10 plus at a time swaths of properties for short-term rentals. We already know how bad the short-term rental industry is. I'm going to be doing some videos in the future for the real estate crash course because I keep making videos. So if you lock in at your price, even if tomorrow it's $500 or $600, you're locked in. You're keeping getting these lessons. There's a way to do this properly, but think about all the people that bought these short-term rentals. They did it right. They got their DSCR loan, and it's in the entity's name and not their social security number. When they walk away from the managing portion of this LLC and say, sorry, take them back, what recourse do the banks have? This is even worse. Now, the banks are going to be able to take the properties back. Don't get me wrong. They'll be able to take them back. But they don't even have any personal information to be able to go after that person personally. This is worse than what we saw in 2006. It says here, no prepay options. There's 1 to 50 units are okay. Fix and flip are okay. A 650 plus credit score. Now, the only reason on DSCR is that you'd use your personal credit score is if you wanted to do a different LTV. I'll give you an example. I think last time I checked, without using any of your personal information, being a managing member of, let's say, an LLC, you could qualify for 70% loan to value. If you put in your credit score as the managing partner and it was at a certain rate or higher, you could qualify for 80% loan to value on these DSCRs. This is a toxic asset. Oh, and here's the other thing too. Trust Financial, they're doing between $150,000 loans and $30 million. So when you have that, I mean, that's a weapon. That's a financial weapon that you can wield. And the problem is a lot of people, a lot of investors have no concept of real estate cycles like I've been teaching you. And what they're doing is they're buying them based off of insane rents that are already starting to crash. And as more and more of these apartment buildings go through the foreclosure process because of the commercial mortgage-backed security fiasco, because they're in that limbo phase, when they hit the market with new owners and they start filling up, rents are going to go down even faster. This is going to spell disaster for a lot of people that wanted to become instant millionaires. And right now they're on YouTube bragging about how they've got $200 million in debt. And the Economic Ninja is going to be there to report on every single one that closes their door, because this is a financial weapon. And if used properly, you can make a lot of money. If used improperly, which I believe that 99% of the real estate community is not using these properly because they don't understand real estate cycles, because they didn't even own real estate in the last crash, let alone before that crash started. They have no idea what's coming to them. If you want to be a part of this and you want to check out the real estate crash course, I've got some links down below. $250, which is 75% off right now. And once you're in, and everyone's going to get enrolled in a new course, Home Seller Pro, which hopefully comes out, hopefully Juan, are you almost done editing those? Hopefully that's out in the next few days. With that being said, I thank you so much for watching. The Economic Ninja is out. Let's do this.